Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Thursday, the end of the DNC convention in Chicago, August 22nd, 2024. I already know that it's going on because where I live, the limos and the Secret Service all go down the street where I live. I'm telling you, I many nights I can just walk to the United Center, catch Bulls games or hockey games. They're right there in the concerts. You know, you get in there. There's always the scalpers around if you want a last-minute ticket. I did get taken once, so I bought a ticket. It was fake. Went there. I was so aggravated. Okay, it's really not legal to do that. So what I've been doing is actually, they have a hotline where you can buy last-minute tickets, and it's the easiest way. Once you've been burned, you learn your lesson. All right, so as we look at these markets, let's understand what we've got. Tomorrow's the keynote speech at 9 o'clock in the morning by Fed Chair Powell. Maybe we should go right here and look at some of this. He's going to be coming on at 9 a.m. He sets the tone for the meeting. The meeting ends very quickly, by the way. By Sunday, everybody's flying home from this thing that wants to leave. But the question is, what does he say? What clues is he going to give you about what the next FOMC cycle is going to be? I think we've defined that the cycle's not going to be as restrictive as it is. The bets going on, the Fed's going to go 50 basis points, the Fed's going to go 25 basis points, or the Fed's not going to do anything. Those are the bets. As for the crazy bets that we have to go 75 points right now, I think you realize the people that did that made, I want to say they made themselves look foolish. They jumped, and that's why they're not Fed members, those type of people. The Fed does things in measured ways. They'd rather be late than jump and create panic, and that's what they won't do. If there was a real calamity in the U.S., I'm sure they could go 75 points. But when you think about it, even with the numbers terribly wrong, and they are terribly wrong by the Bureau of Labor, and I heard people defending them today. They should not be defended. All right? They got everything wrong. The numbers were wrong. They released it wrong. It's that simple. And if they can't do the job, those in that should get out of the job and let those in that will do it. And if they need more money, then Congress should be certain that they get the money to operate right. But what they're doing, it's not the first time they've, if you will, screwed up on those things. But to make a long story short, I think it's going to be a measured speech. I think he is not going to tell you what they're doing in September. I think he will lead you down the road that if it's appropriate, it's a live meeting. Members were at the last meeting, many of them starting to get in favor that we get rid of the restrictive policy that we've had in the United States from them, and I think they're ready to embark on that. Does that mean 50 basis points? I doubt it, all right? I'm looking at the data so far, and from the data I've seen, I think it's a 25 basis point cut. Does that mean that we can't get more data between now and the 18th when the next meeting takes place and something else happens? No. Easily that could happen. I've kept my door open, and I am shutting the door that the Fed will sit pat. I think they're going to make a move. I think this last labor number was the nail in the coffin that labor's not as strong as they thought. The numbers were wrong. They're not terrible, but they were wrong. New home sales data. We saw existing home sales data, and as you know, every month this comes out, we go up another 4%. Who can afford these homes? A median home price, $426,000. I mean, can you imagine? You're just getting out of school, you want to buy your first home, and that's the median price. I was looking today in New York, they're having a lottery system in the Upper East Side. If you know New York, it's very Tony there, very, very Tony. And they're having a lottery on some properties that have been taken over and some in the Hudson District. You have to qualify for them. In the Hudson District, you can get a rental for $3,800 a month, and you'd have to earn just under $200,000, and you'll be able to get a $177,000 townhouse type unit. I guess it would be a studio in one of these buildings and/or a one-bedroom for $177,000. Obviously, not many of them going to be passed around, and it's a lottery system, but it just gives you an idea. Every city's different. The cost in every city is different. What you make in New York is very different than what you make in Chicago. What you make in Chicago is different than what you need to live in Los Angeles. Everything is different around the country. Keep that in the back of your mind. You get the cattle on feed report tomorrow at 2 o'clock. And in Canada, you saw the grain markets plunge today off the strike that took place. At least that's what I thought was one of the culprits there. Off the strike that took place in Canada at the railway. I didn't expect it to last long. They traditionally don't. As of now, the trains are going to start running again as the government has stepped in and ordered arbitration between the parties. Now, I don't know enough about the legal way the arbitration's done. Is it binding? How long does it last? Who holds it? But once you get it away from the judges and you get into the hands of pros, you probably get a better overall approach to things. So that part will be gone. That doesn't mean that harvest pressures aren't on the market, but you have to take out the impact of that right away. All right, so you know what tomorrow's going to be. Tomorrow's going to be a day where the algorithms at 9 o'clock take over the trading in your stock indices. And as they take it over, if you're trying to guess on every word what's going on, just understand that algorithm can be in and out quicker than you can type your order. It's just boom, boom, boom. It's going to be all over the board. And I sit back, I let him speak, I look at the market for a while, and I react later. I have learned that often the first reactions aren't the best reactions. And if I miss something, say la vie, so you miss something. But the market on its own, up tonight. We're looking at currency, sort of a mixed bag tonight, not going one way or the other. We put some yield back into the 210, and you can see how they're all working now in the 10-year and the 5-year. I watch that a lot. On the energy market, sort of flat. Still no word out of Hamas, Israel reaching a deal. My guess is it's going to be difficult if it can even be done. The more I'm reading about it, the more I see Israel wants to keep control of the Philadelphia corridor and that other corridor they built right through the center of Gaza so that they control things for a while and make sure whatever. But the Philadelphia corridor, number one, I don't know if Egypt would agree to that. That's right on their corner. Number two, it does stop the transport of all those munitions that have been coming in. And I think that's important to Israel's security. I'm not saying it's right. I'm just saying I understand why they're doing that. There is no right in this Israel-Hamas situation, in my opinion, okay? And I'm not a pacifist. All right. As we take a look at the S&Ps, you're back up near the highs, but not there. You're up about 0.5 point for the week. Excuse me for the coughing, but the COVID is giving me that right now. And notice how the market, as I pointed out to you, you've got this coming up, you came back. Is that an inverted head and shoulder formation? I mean, you got to ask yourself what this is in one way or the other. It could be. So we've got to keep our eye on this neckline here, what the market's going to do. Right now, it certainly came into this zone, and it sort of failed, okay? And do I trade off these patterns? I really don't. Do I pay attention? I absolutely do. Do I understand them? I think I do. Have I taught them? I certainly have. And is this free to you in our offering of our futures trading kit, where I give you I think the 14 or so most popular patterns that I know. So this is one you watch. Now, it's also an outside day down. So it's also, some people will call it a key reversal down. Why? Because from this low, you went all the way up, and now for the first time, you've broken through everything. And when you did it, you can see how that is. What it hasn't done for me is it didn't change the swing line, which still has higher lows and lower highs. Often you'll get one of these, and we might even see one or two tonight, where you absolutely break that pattern. That's even a stronger one. Now, should you take out the highs of today, tomorrow, it's often a sign that you've got a bear trap laid here, and the market's going to go for the most recent high. So it's not that far away, but that's what it's doing. If you break, in terms of moving average support, the 18-day average is 54, 65, 75. Right between that, there's the 100-day, and I think that would be your support zone. The resistance, remember I said, you sometimes get to the point where you can't even kiss that Bollinger Band, which seems to be the case right now in the market. It made a run, couldn't get up to it. The band kept outshifting the market, even though we had that vertical price rise, just how the algorithm works. When you look at the slow stochastics, do we have an embedded reading? You cannot count tonight's reading because we don't know how Friday's going to end up. But you certainly can count Thursday's, both numbers over 80, both over 80 on Wednesday, and both over 80 on Tuesday. So Tuesday, Wednesday, Thursday, you have it. You have an embedded reading. So until the red line closes under 79, I contend the pros are going to buy the break. If it closes under 79, then it opens the door to get back to the 18-day average of closes. There's another way to buy that market. I don't show that here. I show it in my morning subscriber videos. Got it? In the NASDAQ, same pattern. Look at the big reversal that you came down. You didn't get anywhere near these old highs. The support's ultra clear here, the 18 and the 100-day, a real bull, especially people that follow moving averages. They want to see the 18 get over tomorrow, the 100 close over it. Then you have a full bull setup again. You've got the shortest term average, the 18 over the 100 over the 200. That's bullish, and you have your embedded reading. Tomorrow's going to be an important day. In the Dow, this is that pattern where I just mentioned, where you get the outside day, and on this rise, suddenly now you have a higher high and a lower low. You've broken the uptrend. That's the point. Let me do it this way. I'm sorry, I came back one chart too many. Let me come over here. There we are. And here we are. That's what you're doing. Now, if you take out that high, again, I would call that a bear trap. If you don't take it out, you're overbought. In play is, do you get down here to the 18-day averages? Is the market able to stay strong enough to force an embedding next week and the market moves higher? One sign that it's going to move higher would be, to me, if you take out yesterday's high. Now, I'm only giving you part of that rule. If it takes out the high, where would you have a stop? And I covered that in my outside day course. In the Russell, you've got the higher lows, higher highs, and no reversal, and overbought. So you can see where the support is. The trend has been up, but to get down to the 18-day average, you break the uptrend by taking out the last break low. In the 10-year notes, this is how markets pull back. They came back to the 18-day average. It's as neutral as can be here going into this report, and so is the 5-year. Look at how they both came back. Remember what I teach you here. The line in the sand. The line in the sand's the 18-day average. When the market's over it, you have bullish bias. When it's under it, bearish. When a market makes a spike and it wants to pull back, it often will pull back to that 18-day average, and it's like a pinball machine. It goes into the reset mode. You want to play? You got to hit reset, and from there, the market tells you what it is. Right now, the trend is up. The bias is up. You'd have to take out this low to be bearish, but you know you're going to get these wild gyrations at 9 in the morning. So be ready for the noise. That's the best I can tell you. In the dollar, I expect professional selling tonight to come in on rallies up here. You're still embedded, and that's if it stays embedded. It hasn't opened yet. When it opens, if you're not over 21, I expect to see selling. Could wake up in the morning, the market's in a roar to the upside. Tomorrow's not the day to be a hero. Let the Fed chair make his move, and then you can make your decisions what to do. We look at the eurocurrency. Look at how it got up today. It's been riding the upper Bollinger Band, and it's stepped away from it. Is it going to keep the embedded reading? So far it is. So this is still more bullish against the dollar. Again, the risk factor tomorrow is how does the market react to the Fed speech? Fed chair speech. British pound, embedded, bullish. But you don't buy Bollinger Bands. Let the market set back on you to do things. We're seeing that wages there, everything is pointing where there could be more loosening up by the Bank of England. In Bitcoin, you've pulled back to that 18-day average, and you've been sitting there now for 3 days. Again, That's what markets often do. They'll come after a big break and come back to it and try to figure out what to do. Resistance in the crude should be back at the 18-day average, 78.66. Notice how calm Iran has been in not doing any attack. We now have two carrier groups in the Middle East. So the U.S. is prepared for whatever happens, but my guess is nothing's going to happen for a while. Iran's playing this very cool, very wise. They can do whatever they want at any time. Maybe a deal can get done. We'll see. And they keep Israel on alert. You know what tourism has done in Israel this year? Right through the toilet. You know what the Israel economy is doing? It's coming down. You can't keep all this war up and think you can keep your economy going. Sooner rather than later, the reality of economics, people loss, we hope everybody comes to the table. In WTI, the resistance here, again, oversold. Gasoline, well, you're bouncing off the Bollinger Band, which you should. You're oversold. At any point here, you could see this market try to make a low. Wouldn't surprise me in any manner, way, shape, or form. And nat gas peaked out again. You're back into your bear mode. Remember what I said yesterday. If you can get down, take out this low and close under the 18-day average, I think the bears grab control. I think they'll be selling the market against the 18-day average, which stops over these highs, looking to see can they drag it back into the 204 area. Sorry that coughing there. Nothing you can do when this doesn't go away. I'd like to give you free access, if you haven't tried it, to my futures research. I write twice daily reports, Monday through Thursday. They'll look like that. They're bullet points. They give you what I want you to focus on, where I think the markets might get good ideas from. Graphics are included in them, buy and sell recommendations, full instructions in there as to what to do, matched with my morning video, because in the video, I open the charts up and I show you this is why I'm saying to do this, here's what to do there, here's what these trades based on these markets are based on, where do you go with them, where's the stops, where's the weekly chart, the daily, it's all there. I let the chart do the talking, and then I give you the interpretation that I'm seeing with it. You can even watch this on our mobile device that we give you with this. So, many ways to keep up with it. All you need to do is go to iraepstein.com under the word free offers. If you want to become a subscriber, go to research. It's all right there for you. Sorry I'm coughing. I'm Ira. Talk to you later.